Welcome to Make Money Count, the podcast by Cannect. Be sure to subscribe, rate, and write us a review on your favorite podcast platform.
Gentlemen, good afternoon. Welcome in.
Hello.
Thanks for having us.
Thank
How you doing,
for
Al?
being here. Professor of Mortgage Brokerage course at Seneca College, Marcus. I'm just curious, working with the future generation in your industry, did it give you a sense of excitement or a sense of dread? Because, I mean, normally you talk to people and they're pretty polarized on where they see their students headed in the close future.
I really enjoyed teaching the course. So this was when I first kind of got into the business. I was taking the courses to become a broker at Seneca College. I think there's about a dozen courses over a year, or you can take it over a 6-month period. But I really enjoyed the classes, and I became friends with the woman that ran the program. She was a lovely lady. I wonder if she's still there, actually. And I went to her and I said, listen, like, I used to TA when I was doing my undergrad at Wilfrid Laurier, and I would love the opportunity to teach. And it was kind of for two reasons. I was really young when I started in this business. I was like, as soon as I was out of university, I went to go work at one of Canada's banks in investment banking. And when I left, I was probably 21 years old, and I looked really young. And I thought that maybe it would be a good idea to add that I was the professor of the mortgage brokers course when I was going out there and talking to real estate agents and accountants and financial planners, so they wouldn't look at me like some kid who hadn't.
Punk kid.
Yeah, but I still was a punk kid. I was a punk kid who was teaching the course at Seneca College. But no, listen, it was great because I got to meet all kinds of people. I got to meet some people who I'm very close with still to this day, that were, students of mine in the class. Some of them extremely knowledgeable about the mortgage industry. Some of them have been doing it for longer than this. So I learned a lot. And I think what you find about this industry is that most of the people that are brokering mortgages and have been doing it for a while, it's not just about, making a living. I mean, although you can make a great living, it's about speaking to people and helping them on a regular basis.
Is it fair to suggest, and this is an image that was brought up in the 50s with accountants, and that is that any industry involving money tends to have no personality. You tend to expect to deal with people, who keep their heads down, staring at figures and numbers and stuff. And to be honest, doing the money shows over the years I've found it completely the opposite. And if you ask someone out there, hey, I went to a party last night with an accountant or whatever, they're going to go, oh, that must have been fun.
For the most part, I would agree with you, but I also work with Justin. So, there are.
Do you make Justin call you professor?
Oh, no, never.
Hey, sir.
No, around the office, it's pretty cordial with the exception of I like to be called His Royal Highness.
Yes, that is true.
Quite right. How did you, Marcus, quickly, because I am curious. Were you always a money guy? Like, were you the kid sitting 16 years old in class, figuring out compound interest? Or how did it happen? How did you get to where you were?
100%. I started my first business when I was 12 years old. I hired my neighbor to drive me around because I didn't have a driver's license.
Nice.
Then when I was 14, I opened up my second business, and my neighbor was there again for me. But this business needed a truck, and I bought a very cheap truck, and then the truck broke down. So I had to go work as a waiter to get the money to fix the truck. And then we were off to the races.
What about you, Justin? You always lined up for where you are today, or?
Honestly, my whole life, I've been the kind of guy that just likes to socialize and be around other people and speak to people, whether it be on the phone or in person. So I think it was quite the opposite. I do remember that I did get a 70% in math one year, but that was an anomaly. So
that was a high.
But don't worry, I have a calculator on my desk, right? But listen, for me, it's more about bonding with people and helping them, and watching them kind of go through the motions of fixing a situation, or so on and so forth. So yeah.
Matthew, what about you? I mean, 12 years ago, 10 years ago, is this where you would have figured you'd end up?
No, to tell you the truth, 12 years ago, I had just met Justin, and we were good friends. We both parted ways in our careers. And about a year ago, they asked me to join the team to start doing this podcast for them. And after meeting Marcus for the first time, I was pretty much like Donnie in The Wolf of Wall Street. Like, is that your car outside? I'll quit my job right now. I'll quit my job right now, and I'll come work for you. So, I mean,
one last question, Marcus, before we get into the actual show part, because I'm curious about getting to know you guys, and that is, for someone listening, I mean, you put back on your professorial robes, which I doubt you ever had, but is it a good industry? Is it a good business for somebody? And who's someone out there that is listening now for that matter, that should probably consider it?
Oh, that's a good question. I would say, like, number one thing, you got to have a genuine concern for wanting to help somebody through something, or you got to really like the people. You got to like people. You got to enjoy dealing with people on a regular basis. And more importantly, you got to be a good listener. Because if you're not listening and you're not spending time to absorb what the customer needs, and a lot of times they're not going to be able to verbalize exactly the timelines or the dollar amounts. So if you can glean information from people and develop a relationship, and you're a good communicator, those are the key skills. After that, like, if you're great at math, awesome. But I'll tell you something, that the way math happens as a mortgage broker, for the most part, is it's either calculating a payment or calculating a percentage. And it's like answering phone calls on mortgages all day is kind of like doing your own little Sudoku puzzles.
No. That's not a bad example, though, because Justin, Matthew, you both said before that is kind of what you do. You spend a lot of time listening to the calls you get and then working with the caller to try and find out via the Sudoku puzzle what is the best fit for them. And it can be a variety of different things.
Yeah, there's tons of options on the table, obviously, and different routes that we can take this. And what Marcus said about really just listening to what exactly they need is definitely the most important thing, right? Because like you said, I wanted to pipe up at the moment, but yeah, most people, when they come to you, they just say, this is my situation. They obviously don't come to you and say, like, this is the we are the people to take them down that path. So just listening is very key, and yeah.
If you like people and you're a good communicator, you're going to do well in almost any field.
Yeah, 100%.
Right?
But more to the point, and I mean, we've talked about this in the past, the audience who are listening, the people who are going to pick up the phone and call you, they have no idea what questions you're going to ask, nor do they have any idea what they need to know to answer the questions that you're going to ask. So it's reassuring to know that you will obviously gently lead them to where they need to be, as opposed to, waiting for them to ask the first question, which they have no clue what it is.
Mm. Yeah. And I'll tell you, like, last week's or 2 weeks ago's show was so great because of how many people we had on the lines. So we should do if you're listening to the show today and you have a mortgage and you have any type of question about that mortgage, especially if it's relating to maybe it's time to break it, maybe it's time to renegotiate with your bank. Everyone listening to this mortgage should understand that the 5-year fixed rate for a mortgage right now is like 1.7%. That's 5-year fixed rate money. The Bank of Canada's prime rate is at 2.45%. You can probably get a variable rate mortgage at around 1%. But keep in mind, we know inflation is coming. So if you are confident that inflation is coming, which we are, and you are sitting in a 5-year fixed rate mortgage, which most Canadians are, or a 5-year variable for that matter, understand that breaking or renegotiating now will add 5 years from today's date of what could be a fully insulated 5-year fixed rate. And there is a ton of value in that. There are some things that could derail this inflation story, right? We could, you were talking about on the last show. we've got a federal election coming up. We know, there's one party that's very likely to win that election. And it's very likely that once they win that election and receive a strong mandate, we're going to see higher taxes. And if we see higher taxes, that could definitely impact inflation. So, but regardless, if you're listening to the show right now and you have any type of question about your mortgage, I think last week we had a bunch of calls. We helped a bunch of people. That's the reason why we're doing the show. So if you're listening, don't be shy. Give us a call. I'm very nice. Justin is relatively nice. So.
I'm nicer, hands down. We're both the same amount of
Let's
nice,
take a break for traffic, and we'll come back and we will figure out definitively who is the nicer one.
I love it.
That's me. I am nicer.
Alex in Toronto. Good afternoon. Welcome in.
Hi, gentlemen. How are you?
Pretty good. How are you?
Good.
Great. Brilliant idea for a show. I don't know what percentage of Canadians have a mortgage, but this has to directly affect every one of them. Listen,
Thank you.
I have a question. I went to the bank the other day to see if I can get a better rate on my mortgage. The balance on my mortgage is around $400,000, and my rate is currently 3.19%. I was offered a blended rate of 2.94% with a penalty of $10,000. I'm curious to know whether or not you think it makes sense to look around.
Yeah, for sure. It sounds weird that that's a really high blended rate, right?
Yeah.
So I would say, first off, there's definitely more wiggle room there. I love that your penalty is only $10,000 on a 319. It means you either don't have much time left or it's with a decent provider with a decent penalty. That $10,000 penalty on $400,000 represents 2.5% of the loan amount on 400. So if you could switch to, a 5-year fixed, even compare it to a 5-year fixed at 175 from, you said 319, you're looking at, a really nice chunk of change, especially if it's for a period of time that's longer than 1 year. At the very least, what I would say is after the show, we should connect and we should connect with an A, and then we can at least provide you with what the rates on the market are. And you can go back to your bank and you can say, listen, I'm going to leave. Here's what I've got on offer. The only thing that I would caution you on is when you're dealing with the bank, number one, if you're looking to switch from a fixed to a fixed, understand that if you do decide to break that mortgage in the new term of the new loan, you're going to be subjected to the same mortgage penalty calculations that you're dealing with right now, and it's going to suck. So be aware of that and be cognizant of the fact that in the same way you're looking to break your mortgage right now, you very well could be looking to break this mortgage that you're obtaining. Like we said in the last show, it's 75% of Canadians break their 5-year fixed rate or 5-year mortgages before their maturities. So even though the intention is that you're not going to break it, you might break it, in which case the bank is the worst place to have a mortgage. And if you're switching from fixed to a variable rate, at a bank, you got to be a little careful too, because they have some tricks where they convince you that the variable is the way to go at the start, and then throughout the mortgage term, you will receive information, or you will get the odd phone call to switch into a fixed rate mortgage, and you're never going to get a fixed rate mortgage that's at the market in the same way that you're being offered right now a blended rate that's 1.2%, 1.25% above the market.
Mm-hmm.
It's just ridiculous. What the banks are getting comfortable because customers are sticky.
Mm-hmm.
Because, if you got a savings account there and you got a credit card there, you might as well have your mortgage there. And the banks know that.
Mm-hmm.
So they know you'll endure a little bit of pain to be with that bank. And the job of the best banker is to figure out just how much pain so that they can get a gold star next to their name in the back of the branch. So don't be the guy that allows anybody to win a gold star when you're dealing with your bank, is what I would say.
That's a good bit. John? Alex, any more questions? You okay?
No, that was great. Very helpful, guys.
Brilliant.
I'm going to do that. Thank you so much for your time.
Thank you. If you want to follow up with them, the phone number 416-766-2666, 416-766-2666, and the website Cannect, Connect with an A, connect.ca. Marcus, a couple of weeks ago, you said that statistic. It was somewhere around 70% of people break their mortgages. It seems like an awful lot of people.
Yeah, listen, it is. And that stuck with me. I think that was very early on in my career that I learned that. And it stuck with me. It really stuck with me. And it's not always.
Why so many? I mean,
So
it seems
you think about
huge.
There's tons of reasons why someone would break their mortgage. Number one, the equity in your home is the cheapest source of capital you will ever have. No one's going to get an unsecured line of credit cheaper. No one is going to get a credit card. You might get a credit card cheaper, actually, for like one of those 6-month introductory terms. But it's the cheapest source of capital you have. And I would argue that if that's 70, we're going to find out what it is today, but I bet it's even higher because that 75% stat was probably 10 years old.
Mhm.
And over the course of that 10 years, we've seen a rapid increase in property values. So although the federal government and the Bank of Canada and CMHC have enacted certain measures to slow down people's ability to access the equity in their home, the fact that property values have appreciated, we probably doubled in the last 10 years, means that more and more people would have been looking to access that equity. And the most intelligent way to access that equity is to, if you need $100,000 to pay off unsecured credit cards or to send someone to school, I guess it would probably be like school in the States for $100,000 or a renovation, whatever it is.
Wedding.
Or wedding. Yeah. Justin's getting married soon, by the way. We'll talk about that in a second. Yeah. We'll talk about that in a second. He just announced it to us today.
We'll set up the GoFundMe page now.
Yeah.
Perfect.
So what I'm trying to say is if you can find a way to access that money that you need at a cheap interest rate, amazing. But if you can couple that with actually reducing the interest rate on the mortgage that you have to begin with, whoa, come on, that's awesome, right? Like, look at you got a 3.19% 5-year fixed rate that Alex was just talking about on the line. If he actually needed another $100,000 and there was a $10,000 penalty to break that mortgage, think about all of the ancillary benefits in addition to just getting a 1.7% 5-year fixed rate. So he's going to go from 3.2% to 1.7%. So that's right. Immediately he's saving 1.5% off his $400,000. That's $6,000 every single year that he's saving. And he's getting another $100,000 where arguably the only alternative would have been some sort of unsecured line of credit or credit card. So he's saving interest there. He's saving money on his existing mortgage. And whatever the remaining term he has, he's tacking on another 3-4 years, insulating himself against further interest rate hikes. So there's so many things to think about when you have a mortgage and you need capital. And even if you don't need capital, it's something that everybody should be thinking about. So why do we break mortgages? We break mortgages because we want to access equity. We break mortgages because we have an investment opportunity. We break mortgages because we move. Property values increase. It's like you don't want to get left behind. So, you got a house, I want a bigger house. There's a lot of movement. People moving up, people moving down. Life happens in the meantime. A lot of reasons to break a mortgage.
416-872-1010. You can send us a text message at 71010. And we're in the process of setting up Justin's GoFundMe page. So we'll tell you more about that as we continue. Let's check in with Nancy in Richmond Hill. Nancy, good afternoon. Welcome in.
Good afternoon. Thank you. I'm wondering if you deal in commercial mortgages.
We sure do. Yeah, we do.
Good.
We do a lot of commercial mortgages.
Okay. And can you tell me what you think because you said the rate for the residential mortgages at the beginning of the show, what would it be currently for a commercial mortgage, a variable rate?
So it's a little harder to price a commercial mortgage just off the fly like that. So I would say the limitation more on the commercial mortgage is going to be on the loan to value. and who your existing lender is. But, you could see a commercial rate depending on the type of real estate it is. So, if it's owner occupied versus rental, and then if it's rental, it's a land, it's just land. Okay. What's the land being used for?
Nothing currently, but it's meant for future residential development.
Where's it located?
North of Toronto.
Okay. How long have you had it for?
I don't have it. This is a.
Oh, you're looking to purchase?
Yeah, possibly. This is somebody I know, and they're considering this and trying to get an idea about the mortgage rate.
So it's for residential development on a commercial basis, or is it for residential development for a single family home?
No, for a single family home. There are existing family homes in the area already, but there's more land available for purchase.
Okay. So depending on the lender, in this case, I probably, there's a couple credit unions that are a little more aggressive on how they lend in a situation like this. But I would probably try to steer this towards the residential side, because if you were to get a commercial land loan from one of the banks, you'd be capped at probably, depending on the location, 50% of the value of the real estate. Whereas if you have permits or a path to permits for the home in place, it's possible to get 80% of the property's value at the same rates that we're talking about, sub 2% for a 5-year fixed, 1% probably below prime on a variable rate for the construction, for the purchase of the land and the construction of a residential home. And you could expect, I don't know the covenant, but like assuming all things are perfect, you're going to be at 75 to 80% of the value as you go. And then the way they kind of retain you as a customer, there's one credit union in particular that I'm thinking about, is that they would just have a clause that once the home is completed, they have the they'll continue the mortgage for a 5-year period on the home. But it's, commercial lending on land, if it doesn't have a path forward on a kind of single family residential plan, is going to be more expensive. But there are some really kind of clever and inexpensive ways to package it if you are building a home on it. And we can definitely help you or your friend with that. Okay,
so the number that my friend can reach you on is?
766-2666.
766-2666?
Yep.
Yeah, and that's 416.
416, okay. And do they ask for anybody in particular?
Anybody but me. Just kidding.
Sorry. Just repeat your name for me.
My name is Justin Turner. No, I'm just kidding. My name's Marcus, but whoever is calling can just ask for Justin, and he'll guide them where they need to go.
Okay. Thank
you for your call, Nancy. There you go. And the number again, 416-766-2666. It's actually fairly straightforward. You just ask to speak with the nicest guy in the office, and he'll hold for a second. And then.
Well, I'll jump in then. I just want to say that we are currently in the office recording, so we can't answer the phones right now. They just lit up with us. So thank you, everybody calling. But during the radio show, call into the show. If you got a question, call into the show.
Yeah.
After that, Justin will be waiting shortly after 4:00 to take your call.
I'm here.
Ahmed is in Toronto. Good afternoon. Welcome in.
Hello. Thank you so much for taking my call, guys. I had a question regarding my mortgage. So, interesting that this trend you're talking about, because I am very loyal to my bank. My father always told me that I should be loyal to the bank, and so that whenever I need them, they could be called on. And I've always felt that they may not actually have my back. My current situation is that I have a mortgage fixed at 2.59%. It's coming up for renewal, and they are offering me 2.19%. And I just heard you guys talking about 1 point something and maybe even 1%. And so I was wondering if you could give me some advice. I mean, I have everything with my current bank. They control my investments and my RSP and my pension and my credit cards. And so I don't know if you need this information, but I have roughly 500,000 mortgage outstanding. So if you give me your advice, I'd appreciate it. Thank you.
Yeah, sure. Listen, your bank does not want you changing one of your financial products. But just as much as they don't want you to change one of your financial products, the fact that you have a lot of your financial products with the same institution, they also figured out that you're loyal. So you're never going to get amazing pricing right off the bat. The more you can intimate to your bank that you shop everything, the better off you're going to be. It's like you got to understand that you are negotiating. You're not negotiating against the person who's offering you the interest rate. You're negotiating against that computer they're punching in all the keys into. And that computer has been trained to provide that person responses to provide you. So when you go in to a bank, it's like you're at work. Don't go in there and be disarmed by a green couch or somebody telling you that you're richer than you think. You got to go in there with a mindset of it's you against them. Someone will win and someone will lose in that transaction. And you got to push as far as you possibly can. Almost even, you know what? Here's my advice to you. Take the negotiation to a point where they say, I'm really sorry. We just can't help you. Figure out where the breaking point is on that rate. We can help you do that. You know what? Why is it that the bank's 5-year fixed rate on their website right now is like 5.19 or 4.99%? And you need to go in and fight for anything more than that. Why is that? Why is that when Cannect, some mortgage brokerage in Toronto, is able to put the absolute lowest rate that we can get you on our website and update it every hour, and a big, huge bank that makes billions of dollars in profits can't do that? Well, I'll tell you why. Because they want to negotiate with you. The same reason why when you get a renewal letter sent to you at home 6 months or 3 months before your mortgage is coming up for renewal, the rate on it will suck. And if you don't respond, they'll call you and say, well, geez, you better respond, because if you don't, you might not have a mortgage when this thing renews. And then they'll call you again and say, listen, we notice you haven't responded yet. It's 30 days now. We're sorry about being tough at the beginning. Are you shopping us? Why don't we give you this better interest rate now? So just understand, it's a game. It means much less to them than it does to you. And there are ways to win this game. You could go to this is what, a mortgage broker will do, right? We have this fabulous client. He showed great loyalty to one bank. He has RRSPs and investments with that bank. He's got a checking account and a credit card. We build up a file so that people want to offer you the lowest possible interest rate. You don't have to move everything to anybody. You're in the driver's seat. Not them.
Guys, just before the break, we were talking with Ahmed. He brought up a great point, and I go through this. It's funny how I'm seeing the parallels, because I've been doing an employment law show with Howard Levitt for years, and we keep getting people who've been fired by their employer. They're just amazed that the company, doesn't have loyalty, or that, they've been with this company for 25 years. How can they treat me this way? And I'm learning, from our conversations here, it's exactly the same with the banks. And that is, the banks have a fiduciary responsibility to the shareholder, not to the guy standing in front of the teller saying, how long have I been here and how dare you treat me like that? And yet there is this sense of awe when the banks are, treat them like the numbers on a spreadsheet that, unfortunately they really are.
You said it, that's it. They're not responsible to the clients. They're responsible to the shareholders. That's it. So anybody that thinks differently or thinks they have a relationship with someone at a branch level, you may very well, but the bank, it is not incumbent upon the bank to better service you because they're going to make more money, or to treat their employees fairly. Like, listen, I used to work at a bank, right? But I didn't last very long. I was there for a little less than a year. And then I became a mortgage broker. There you go. But while I was there was this really, really awkward trend that I noticed where, you'd see these guys, and I was in investment banking. So I kind of would deal with, guys that were doing really well, both on the sales and trading side or on the research side. And I was on the research side, which is probably why I hated it so much. But you would see these guys and gals that were working at the bank, and they'd been there for 30 years. And the problem for the bank with someone being employed there for 30 years is that each year that you're there, they need to pay you a little bit more. They need to kind of keep you excited. They need to increase your title. They need to increase your salary. They need to increase your bonus. So it's kind of the same algorithm and the same thinking that's at play to squeeze the most out of a client is at play to squeeze the most out of their employees. And they do it very well. The problem is at a certain point, they shed these higher paid people. And when that happens, you can see it. Like these employees are like, this is incredible. Like they don't see it coming for some reason. When it's happening all around them each and every year, the people that are making, more and more money, eventually they're going to have to get removed and they're going to have to get packaged out. And it's, so if you've got an organization that's treating its best and brightest that way, how do you think they're going to treat their customers? The objective at the banks is to make money for their shareholders. That is it. It is not to be nice to you. So when you go in, like I said, behave as though it's your job. Go into the bank and behave as though it's your job. And one tool that we can provide you with is our knowledge. You're not going to find another company like Cannect that's centered around giving you all the tools, whether you decide to work with us or not. And listen, we want you to work with us. In fact, we feel as though if we give 100 people all the tools and all the information they need in order to get the absolute most out of their mortgage, and we've done our job properly and we've communicated what our role is properly, the majority of those people will work with us because it will make the most sense. And for some, it might not make the most sense. Penalty might be too high. They might have some reason why they've got to stay with that specific lender. Honestly, I can't think of another one other than penalty at this point. But if that's the case, we don't want you to go with an option that we're providing. We want you to go with the option that makes the most sense for you. That's it.
If it helps any, I worked for McDonald's for 3 hours and 17 minutes, and it didn't end well.
What happened?
So I'll tell you guys at some point. It's Steve is in Toronto. Look at that. Steve, good afternoon. What's your question for the guys?
Yeah, hi, guys. Just listening. A lot of what you were saying about the bank, I can truly relate to that. Anyway, quickly, I have say 3 properties, right? And approximately mortgage $60,000 on one. The others are free and clear. What is the criteria to increase my mortgage or get a mortgage on one of these properties? My income has gone down substantially because of the COVID. And what is the criteria now? I know it's not for your possessions anymore. Is it based totally on income?
No. You can. There are still some lenders that have asset-based lending, especially based like with what sounds like very low loan to values in your case. What's the cumulative total of the value of all your real estate, of all 3 of those properties?
I would say roughly maybe 2.3 million, somewhere like that.
Yeah. Okay. So, and the one that's got the 60,000, is that a rental or a principal residence?
Condominium, yes. It's a mortgage. It's the condo say worth 400. The mortgage is a little under 60. And the other two are one, my principal residence and another condo, and they're free and clear.
So the reason why you have the mortgage on the condo for tax deductibility on the interest, or like, is there a specific reason why you put it on there?
I had the condo maybe 10 years. It doesn't pay to pay it off. The mortgage rate is cheap, like you say.
Yeah, for sure. Yeah, listen, I couldn't agree with you more. And then on the principal resident, what's the value of the principal resident?
Say, for argument's sake, 1.1.
So if I were you, I mean, I know we can help as long as the credit is good. I've got an excellent credit rating. I know that for a fact. Okay. Yeah. So we can definitely help. The same rates that we're talking about, sub 2 on a 5-year fixed, pretty close to 1% on a variable would apply. We would look to see what that $60,000 requires as a penalty or a renegotiation first, just to make sure we don't kind of leave any stone unturned. But I suspect the best option would be some type of mortgage line of credit option on the principal residence. You could probably go up to 50, 65% of its value, which doesn't sound like you even need to go that high. But it's not a bad idea in a time like this, when property values are as high as they are, to lock in the ability to borrow now, so that when property values drop, which they will, you still have access to that capital. And if everyone's running around buying real estate right now, you could be sitting there with you got 60 owing right now. You pay that off, you get 650,000. You're at 590,000 bucks that you have access to at any point you want. And when property values drop, or you see an opportunity, or you want to invest, you get a little more than $500,000 available to do so. So I would say definitely call us. This is a great, we'd love to help out regardless of what the income is. You got way too much equity for anyone to say no to you. And in fact, they want you, right? Like they want you as a borrower. You are a great borrower. You are, GIC level risk, right? You should be paying GIC what people are getting on their GIC.
I got 25 seconds left for your answer. Should someone tell the bank that they are shopping around, or shop around and then approach their bank?
So listen, my favorite thing,
25 seconds.
My favorite thing to hear from a client is, I took your offer to my bank and they said you should probably just stick with the guy that gave you that offer. So it doesn't really matter. We'll work with you either way, and we'll walk you through how to get in front of your bank in that negotiation, because that is the goal.
Depends on how much time you have, but I would say go to your bank right away. Say, give me a rate, but know that I'm shopping with Cannect right now. And then give us a call afterwards.
Thank you so much.